What's happening, everybody? Tarafdar back with a brand new video. This has been a very long stretch between our last one and today. So there's a couple of things we got to catch up on, but I feel like I want to give you guys some explanation as to the distance between the last video and today. And of course, the context behind why there was such a gap, obviously. So I've seen a lot of people, specifically content creators on YouTube, create content about personal credit that's very, very redundant. And you guys know I try to give you a unique perspective all the time because I believe that when you have unique perspective, you kind of be able to take that perspective in a way that you can apply it in your own personal life. It's highly customized, it's very beneficial to you, and it's not a cookie cutter type of structure. So we're going to get to that in a little while, right? Now, before we get to that, let's cover a couple of different topics, some news, and some of the things I think you really need to know to really stand apart with the progress of moving forward on a personal credit journey, right? The personal credit journey is filled with so many different uncertainties, so many different avenues of building credit on a very different scale, whether it be primary trade lines, whether it be authorized users, whether it be, just building a personal credit with bankable relationships. Whatever avenue you decide to choose, it's always going to be an interesting process. And the reason I say this is very important now more than ever is because the avenues that you would have chosen in the past perhaps may not be as beneficial to you today, because there are certain things that changed, and those things that changed is affecting your ability to go out there and really create success with your personal credit journey. And if those things are hindering your ability to succeed and create the outcomes that you're looking for, then I need you to understand that you need to really concentrate on things that will give you the tangible results. And what are those things that we're going to talk about, right? The first thing, and above all, is I recommend that you guys really understand the significance of deep diving into personal credit in a very holistic approach. When I say holistic, it means from an aspect of really learning how to read reports effectively, to the aspect of understanding exactly based on the way you analyze your reports, what specific action items that you need to handle, right? And then, of course, giving yourself reasonable timeline and expectation on moving forward. And you have to treat this like a business plan, but on a personal level, because your personal credit, it's the biggest and most powerful cornerstone on financial transformation for yourself, and you absolutely need to give it the treatment that it needs and that it deserves. Because if you don't, what's going to happen is you're going to start running from one strategy to another, one platform to another. You're going to try to find a way to shortcut, and those shortcuts perhaps may have worked for temporary time frames, and then it's going to lead you to an eventual disaster because you're not prepared. So there's a whole lot of things that you really have to explore and identify if you want to create results, especially when it comes to credit repair. It's not one of those things that we can just get by and it's okay, and we can just forget about it, and then it's going to bite us in the rear a couple of days later or a couple of months later. So revisit that. Learn how to read your credit reports effectively. Learn exactly based on how you analyzed it. What are some of the single steps that you need to take? And it doesn't have to be complex, right? I'll give you an example. So you know for a fact that your biggest creditor is $1,000, and you had this creditor for a year and a half, and you don't want to get inquiries. Also, at the same time, you're trying to hunt for trade lines to add to your personal credit file and then go for funding. The problem with that is your biggest individual personal responsible file is $1,000. So perhaps by just reading that and understanding when you started that relationship, it's time to up that a notch, right? And the way to do that is try to borrow up to 30 to 40% of that $1,000 that you have available and try to pay it down as aggressively. And if it takes 2 months to pay it down aggressively, do so. And the reason I say this is important is because these financial patterns, the ones that you would create, the ones that you would undergo by borrowing 30 to 40%, paying it down as aggressively, enables the creditors to feel more confident towards your ability to pay them back. These are things that will trigger the algorithm internally with creditors and their systems and databases and recommended tunes to give you an update and say, look, Mr. or Mrs. So-and-so, it seems that you've been very good with us. You've been with us for a year and a half. We want to give you $3,000 based on the existing $1,000 that you have. This is very nominal. It happens very frequently. It's just that we don't see it that way, right? So instead of running around and trying to find AU trade lines, which is great, by the way, it's not bad, but the weight that has more meaning, more substance, is going to be your individual personal responsible credit accounts. These are essential primary accounts that you would have control over and you're basically signatory on and that you manage yourself, right? If you do this efficiently, and if you do it very effectively, what ends up happening is over time, you build a very good resilient structure on personal credit. The creditors will feel more compelled to give you higher limits because A, you're responsible with your personal payment history. In addition to that, you have a bankable relationship you've established that enhances over time because they're giving you more limits based on your financial parameters, based on your aggressive payment history. Because obviously you're borrowing 30 to 40% and paying it down as aggressively. Now, this is incredibly important because when I talk about bankable relationship, and I always say go and build relationships with institutions, go and find a way to speak with a bank that will enable you to borrow more based on the different various products they have. A bankable relationship has multiple different characteristics. And this is a content structure that I want you guys to really pay mind to. The shortcuts are always going to be there. You can always go after AUs. You can always go after non-essential primaries. Some of them are going to pop up. Some of them are going to as quickly shut down. That's not the most important thing, right? The most important thing is your personal, handled bankable relationships, the ones that you actually signed off on and that you're obliged to and that you're solely responsible for. A bankable relationship has multiple characteristics. Just to deep dive back into that. The first thing you need to understand is the context of that relationship. And what I mean by that is if you have that same example of a $1,000 creditor and you're making aggressive payments now, and then over time, a couple months down the road, they give you $3,000. Your sole duty should always be to constantly enhance that credit limit. Now, you might be asking me, well, Ali, is that really necessary? And based on all the education I've tried to provide you guys, and I said, don't go and get extra credit cards. The goal is not about going out and applying for new ones. And perhaps over time, you may want to just simply to diversify yourself across different bankers and different platforms and financial institutions simply because you want preferential rates elsewhere and you would have established relationships that would allow you to access those preferential rates down the road. That's a very good example to expand outwards. But at the same, your existing creditors, the ones that you have, let's say the $1,000 with Chase, they give you $3 now, and you continuously augment that limit by making the aggressive payments of 30 to 40% of your creditors, borrowing that and then paying it as quickly within a matter of 60 days. What enables you is, and what happens, and it really greatly enhances your credit profile, is A, you get a higher limit, which is your utilization, but also remember the FICO 10T, which is the trends, and some of the things that will happen in the future. You need to understand the bankable relationship is based on pattern recognition, right? It's not about how big your creditor is and what was the last credit you got. All these things, they comprise of a FICO score. But at the end of the day, what are the financial patterns that creditors can rely on outside of the FICO system? And a lot of determination is based on the metrics of how aggressively you paid it down, how you borrowed, and the gradual increases of those limits due to creditor confidence in you as a consumer that enables you to get a lot more down the road. Financial products, not just credit cards, we're talking installment loans, revolving accounts, credit lines, and so on and so forth. Things that actually benefit you as a consumer to see you have good, solid, positive credit standing, and that you actually can have a variety of different personal credit products that you'll be able to access simply because you've streamlined your ability to borrow and you've demonstrated that confidence to creditors because A, you paid them as aggressively as you borrowed them. So that's what bankable relationship is all about. It's about enhancing your current creditors to take them to a level with yourself and them at the same, where you have access to financial products outside of your just credit cards and higher interest rate credit cards, where you can tap into due to sheer confidence of creditors in you because you've demonstrated your financial patterns, right? These are bankable relationships. It's all about patterns. Now, this also brings us to the topic of what happens if Joe Biden's proposal of getting rid of the credit system actually goes and gets enforced. How would that affect me? And the beautiful thing that you guys need to pay attention to and really appreciate is the fact that whatever I'm trying to teach you guys since day one has never been about shortcuts, about trying to game the system or trying to screw with it so you can continue burning bridges. Rather, it was based on build bankable relationships, create financial patterns that demonstrate significant level of confidence from creditors and you guys that say that, look, we don't care about the FICO system as we're not heavily relying on that because we see as a customer here and our balance sheets and this customer's financial patterns with us internally, we feel confident and compelled that they can handle these type of affairs with us, that they can actually borrow more, that they can actually reliably pay us back the money that we lent them, right? So these financial patterns is what's going to be the future of credit. It's not necessarily based on your FICO score. It's not necessarily based on, what are some of the things that you've done in terms of shortcuts of adding AUs and non-essential primaries and how quickly you've done that and how you've gamed the system All these things were very, very efficient in the past. And I'm not to say that they're not going to be efficient now, but the most important thing that you absolutely need to realize is going forward, understand on how to create financial patterns. Learn the magic of patterns, and learn the magic of patterns of dealing with your creditors as effectively as you learn the patterns. And the reason this is so critical, like I said, is because A, you'll now be able to uproot yourself to a significant level where you can borrow more, but also have an access and tap into different financial resources and products that will mutually benefit you down the road. Whether you want to get a mortgage, a home equity line of credit, just a line of credit, installment loan, car financing, whatever the case, you've built and established that bankable trust and relationship. That credibility is there. Doesn't matter what FICO goes through or not, or what kind of new systems Joe Biden proposed gets enacted. All that kind of stuff is irrelevant, because in the creditor's book, you are an existing client that is a high performing client. That is a pattern that has been established. So moving forward, understand the game of patterns. So this obviously will help us shift into the mindset. We're saying, well, look, if we have to shift into patterns and if we have to focus on that, what about the FICO system? And the beautiful thing is, if you focus on the right type of pattern and establish bankable relationship, or trying to establish solid bankable relationship, the byproduct is solid FICO scores. The byproduct is you get a higher utilization. You enhance your payment history on the FICO 10T, which is the trends. So regardless of whether you follow patterns or the FICO system, you still have to build patterns. So the pattern is the precedent. It's the first position. You have to worry about that, because as a byproduct of solid patterns and bankable relationship and enhancement of payment history and getting higher utilization because your banks feel more compelled to give you more, because you've established that trust, obviously, you have a solid FICO score automatically. It's just a byproduct. So if you learn this is the proper way of establishing, enhancing, and maintaining critical credit, I'm not talking good, and I'm not talking better, I'm talking critical. And when I say critical, it means at any given point, with a sheer stroke of a pen and or application online, you can get tens of thousands of dollars in unsecured credit, unsecured. And that's the game that you really need to understand. So all this time that we've been trying to run around and fixing our negative items off the credit reports and stuff like that, the other thing we completely ignored is having that fixed is like you have a lot of manure in your land and you're trying to clean that up, and we cleaned it up and it's all nice and fancy, but everybody around us has fancy homes and we basically have a bunch of wood there. We got to build that home. We got to build that mansion, our ideal target that we want to see and envision. And we want to be able to step into that territory and say, this is something we've built proudly and we're happy about the outcome. So the cleanup is an amazing part of the journey. Obviously, I want to give you guys as much resources as possible. And one of the biggest things I want to tell you guys is I've been giving access to all my courses and content for literally $500. It's in the all access pass. I have the link below this video if you guys want to have access to it. You'll have all the stuff that I have, the Ultimate Personal Credit Mastery 3.0, the Tread and Wave 2.0, and the Ultimate Business Credit Mastery. The Ultimate Personal Credit Mastery has an insider's edition. If you're a credit repair agency or organization, you want to help your customers go through credit repair themselves, this is something that we can talk about in the future. But for all intensive purposes, you guys really have a very decent opportunity you should grab and not ignore. But with all that said and done, and just putting all that aside, I hope today's video give you guys clarity, give you guys some context of what to look forward to, what are some of the things that we really need to pay attention to, what's important moving forward. Is it the FICO? Is it, whatever other stuff it is? And the reality is it's not any of that. It's the financial patterns and the confidence you instill in your creditors and the bankable relationships and strategically how you build that over time that creates a byproduct of solid credit, solid bankable history, and solid confidence in bankers to give you more and the financial institutions to build trust in you so that you can go ahead and build that critical credit that in any given moment you can swipe and or access limits of thousands of dollars should you need them at those instances. So I hope this video gave you guys that context and you get to see a different perspective of how to do all this differently. And obviously as we move forward, we're going to have a lot more videos that are coming out around patterns and how to establish that, all the while keeping solid positive credit and removing the negatives and focusing on eradicating those negatives long term and building patterns of not just financial habits but also bankable relationships that you can bank on. So I hope you guys enjoyed, and if you definitely did, don't forget to smash that thumbs up button. I have an insider's video that's going to be coming up shortly after this one, so if you want to join the channel membership, I invite you to do so. There's advanced content in there and I'm pretty sure you'll enjoy a lot of it. As well as don't forget to access the All Access Pass if you're interested in all my courses for a limited time. And there is a limited time because I'm concentrating a lot on different business activities. It's been taking a lot of my schedule, as you can tell, but I'm committed to helping you guys out. So don't forget to check that out as well. It's going to be in the description in addition to the comment below the video, so you can take advantage of that. And with that said, this is definitely your guide and mentor, Tarafdar. I'll catch you guys on the next one. Bye for now.